Okay, let's unpack this. Today, we're taking a deep dive looking at a very specific market.
Right.
We're using a single source for this one. It's a comprehensive sales forecast report.
Mm-hmm.
And the topic, the global Naphthol Oil Market.
Okay.
This report gives us projections, sales value from 2021 all the way out to 2033.
Quite a long view.
It is. So our mission today is really to pull out the key trends from this data.
Understand what the numbers are telling us.
Exactly. See what the path looks like for the next decade, beyond just the headline figures.
Yeah, it's about getting past those big totals and seeing the dynamics within the market. And maybe it helps to quickly define what we're talking about.
Good point.
Naphthol oil. It's a specific type of refined oil. It's mostly used as a base material or maybe an additive in, well, various industries.
Like what sort of things?
Think wood preservation, formulating pesticides, ink and dye production. Even some specialized cleaning agents use it.
Okay.
So when we talk about this market, we're really talking about demand from those kinds of industrial sectors.
Got it. So this report is forecasting demand and sales for that specific material globally. Let's start with the big picture then, the global numbers from the source.
Sounds good.
It states that back in 2021, the worldwide sales value for naphthol oil was just over $941 million.
Okay, nearly $1 billion.
Right. And looking ahead, it projects pretty significant growth. It's expected to reach nearly $1.4 billion by 2033.
Right, $1.374 billion to be precise according to the source.
Okay.
And if we boil that growth down to one number, the report gives us that global compound annual growth rate, the CGR.
The CGR rate.
It's 3.2% for this period, 2021 to 2033.
And just quickly, for anyone maybe not familiar with CGR.
Sure. It's basically the average year-over-year growth rate, but it's compounded over the whole forecast period. So a 3.2% CAGR, that's generally seen as, steady, consistent growth.
Okay.
It means, on average, the market value is projected to tick up by 3.2% each year between 2021 and 2033.
Right, so a steady global pace, 3.2%. But, and this is where I think it gets really interesting, when you start breaking it down by region, the picture isn't quite so uniform.
Definitely not. The regional variations are key.
Let's dive into those then, starting with North America.
Okay, North America. The source projects it growing from about $332 million in 2021.
332.5.
That's it. Growing to around $466 million by 2033.
Right. And the KGR for the region?
That comes out to 2.8%.
Okay, so straight away, North America is projected a little slower than that global average of 3.2%.
Exactly. And within North America, the report breaks it down further.
Yes. The country specifics, the U.S., the biggest market there,
Has a projected CGR of 2.7%, even slightly lower.
Okay. Canada?
Canada's a bit faster, 3.2%, right on the global average.
Interesting. And Mexico?
Mexico's kind of in between with a 2.9% CAGR forecast.
So what do you make of that spread within North America?
Well, what's significant, I think, is comparing those rates. The U.S., which is the main driver for the region in terms of size,
Yeah.
is projected to lag slightly behind both Canada and Mexico and the global pace. It suggests, according to this source anyway, that while demand is growing, the rate of that growth in the, let's say, established U.S. industrial base might be a bit more moderate compared to other parts of the world or even Canada.
Okay, that makes sense. Let's move across the Atlantic then to Europe.
Europe. The report valued that market around $255 million in 2021.
Right, $255.2 million, growing to about $374 million by 2033.
Yeah, $373.9 million. And Europe's regional CAGR, that comes in at 3.4%.
So notice that's slightly above the global average this time.
And faster than North America's projection, yes.
And the country data here shows, well, even more variation than North America, I'd say.
Oh, definitely.
The source gives KGRs from Russia down at 2.7%.
Similar to the U.S. pace.
Right, but then up to significantly higher rates elsewhere. Germany and France are both projected at 3%.
Oh.
Italy's a bit quicker, 3.7%. The UK is similar, 3.8%. And Spain really stands out, doesn't it? CAGR of 3.9%. The source notes that's the highest among the larger European countries it details.
It does. But then look at Luxembourg.
Ah, yes. Small market.
A tiny market in comparison. But the report gives it a projected AGR of 4.4% over this period.
Wow, 4.4%.
And even the rest of Europe category, which lumps together many smaller markets, also shows a strong 3.8% CAGR.
So that range from Russia's 2.7 up to Luxembourg's 4.4, what does that suggest about Europe?
Well, it really highlights that the underlying drivers for naphthol oil demand things like industrial activities, specific applications. They seem to be evolving at very different speeds across the continent.
Right.
I mean, a 4.4% CAGR, like Luxembourg's projection, means that market segment is, roughly on track to double in value in about 16 years,
Compared to the global average.
which would take closer to 22 years to double at 3.2%. That difference in pace is quite notable.
This audio was created with podcastle.ai.
Double at 3.2%. That difference in pace is quite notable.
It really is. That kind of variation is fascinating. Okay, let's look at Asia Pacific next. The source projects that region starting around $223 million in 2021.
223.2 million, yeah. Growing to $343.6 million in 2033.
And the regional AGR here.
This is where we see the highest projected regional growth rate mentioned in the source. It's 3.7%.
Okay, highest overall region. And when you look at the countries, you can kind of see why.
Right.
China, obviously massive, has a KGR forecast of 3.5%, so slightly above the global average. Japan is right at the global average, 3.2%.
Right.
But then you get India and South Korea, both showing really strong growth projected at 4.1%.
Yeah, that's significant.
Australia is at 3.4%, and then Southeast Asia as a block.
Also very strong. It's projected for the highest TGR within this Asia-Pacific group, an impressive 4.3%.
So why might Asia Pacific, according to the source, show this higher overall growth rate, especially places like India, South Korea, Southeast Asia?
Well, it seems to align pretty closely with what the source mentions about evolving industrial demands and expanding application.
Oh, right.
It suggests that maybe these specific drivers, whatever they are, might just be more dynamic, expanding more rapidly in these particular economies compared to, say, the more mature markets in North America or parts of Europe.
Could be the pace of industrialization, infrastructure projects.
Could be. Things that fuel demand for those naphthol oil applications, maybe just happening at a faster rate there. That seems plausible based on these numbers.
Okay. Switching gears now to Latin America. The source here gives country data, but not a regional total, interestingly.
Right, just the country breakdowns.
We see Brazil with a projected CAGR of 3.3%, so slightly above the global average. Argentina is at 2.9%, which is closer to that North American pace we saw.
Okay.
Colombia shows stronger growth, 3.5% CAGR projected.
Right.
Peru is projected lower, 2.6%, and Chile is at 3.2%, matching the global rate exactly.
So again, comparing these Latin American countries, you see that range. Similar to Europe in a way.
Yeah, though maybe less extreme than that Luxembourg figure.
True, but still, Colombia's 3.5% suggests stronger underlying industrial growth or maybe application-specific demand compared to Peru's 2.6%.
Yeah.
Just underlines that Latin America isn't one monolithic market, right?
Absolutely. It's a collection of countries, different dynamics at play. Okay, finally, the Middle East and Africa region, also detailed by country in this report, not a regional total.
Right. What does the source show there?
Egypt is projected for a CGR of 2.4%.
Okay, below global average.
Turkey is bang on the global average, 3.2%. And then the rest of Middle East category shows a notably lower TGR of 2.1%.
2.1%.
Yeah.
That does suggest quite varied conditions across that very large region.
It does.
You got Turkey matching the world's pace, while other parts of the Middle East, according to this forecast, seem to be experiencing slower growth in this particular market.
What might influence those rates, do you think, compared to others?
Oh, it could be a range of factors. Local industrial development trajectory, specific big projects or lack thereof, broader economic conditions, definitely.
Yeah.
All impacting those expanding applications the source keeps mentioning.
Right. So pulling it all together then, the key takeaway from this specific source seems to be that, despite all these regional variations we've just gone through,
Which are
significant, yes. But the overarching trend it reveals is one of steady, consistent growth for the global naphthol oil market across this forecast period.
Right. And that growth is explicitly linked, as you said, by the source to these evolving industrial demands and expanding applications of the product.
So what does looking at these specific numbers, the CAGRs, really tell us beyond the headline?
Well, I think it paints a much, much more nuanced picture than just saying, oh, the market's growing.
Yeah.
It helps highlight where that growth is projected to be strongest and potentially hints at why. It links back to those evolving demands.
So you can see markets like Asia-Pacific overall.
Right, in parts of Europe like Luxembourg and Spain.
Specific countries like India, South Korea.
Southeast Asia, too. They seem to be leading the way, which suggests that's where the shifts in industrial activity or the uptake of new applications are most pronounced, at least according to this particular report.
Okay. So hopefully this deep dive into these forecast numbers gives everyone listening a clearer, maybe more detailed picture of the global naphthol oil market's projected path over the next decade or so.
Yeah, moving from the general to the specific?
Exactly. We've seen that consistent global growth projected, that 3.2% CAGR baseline. But crucially, we've explored the, well, pretty notable variations by region.
Asia-Pacific leading at 3.7%.
Yeah. And we pinpointed specific country standouts identified by the source Luxembourg at 4.4%, Southeast Asia 4.3%, India and South Korea both 4.1%, Spain 3.9%.
And all tied back by the report to those drivers, industrial demands and expanding applications.
Which leaves us with maybe a final thought for you, the listener, to consider, based purely on this source.
Okay.
If evolving industrial demands and expanding applications are the drivers,
As the report states.
and we see places like Asia-Pacific and specific countries in Europe showing significantly faster growth rates than others, what specific new or expanding industries or applications might be booming in those particular regions? Yeah.
What's underpinning that faster growth specifically there?
Exactly. What's happening in, say, Southeast Asia or India or Luxembourg, that might not be happening as quickly elsewhere in terms of naphthol oil use. It raises an interesting question about the future landscape of this market globally. Welcome to the Deep Dive. Today, we're looking closely at a market that, well, might seem a bit obscure at first, the Naphthol oil market. But trust us, it's actually really important behind the scenes for lots of things you use every day. We're digging into some findings from cognitive market research here.
That's right. And our mission, really, is to unpack what's driving this market, what's holding it back, the restraints, and maybe spot the key trends shaping where it's headed.
Yeah, because naphthol oil, it's not exactly a household name, is it? But it's vital for making the colors in your clothes, certain fabrics, even some key ingredients in medicines. So let's jump right in. According to the source, what's the big picture? What's driving demand?
Well, what's really fascinating is just how fundamental it is for some massive industries. The report highlights, quite strongly actually, the demand coming from the dye and pigment sector.
Okay. Dyes and pigments?
Yeah, think about it. Naphthol oil is essential for creating these alloys and pigments used pretty much everywhere, printing inks, textiles.
The clothes we wear, things like that.
Exactly. The research specifically points to the rapid expansion of the textile industry as a major engine here.
This audio was created with podcastle.ai.
Expansion of the textile industry is a major engine here, especially across Asia-Pacific.
Right. So the global demand for clothes and color is directly pulling this seemingly niche market along with it. Interesting. Where else is demand coming from?
So beyond dyes, its versatility is really key. It's increasingly used in pharmaceuticals and agrochemicals too.
Oh, okay. Pharma.
Yeah, different forms of naphthol are actually critical intermediates. They're used to synthesize important medicines and also some chemicals for crop protection. So as these sectors grow, particularly emerging economies, naphthol oil's role just becomes, well, more important.
And the source mentions specialty chemicals as well. How does that fit in?
Right. That's where its specific properties really shine. The specialty chemicals market, think high-performance lubricants, surfactants, additives, that sort of thing, they rely on naphthol oil for its specific reactivity and solubility.
So it allows for more custom stuff?
Precisely. Creating custom, high-value formulations. So it's not just bulk demand, it's also critical for these precise applications in specialized areas. Its range is definitely a major driver.
Okay, so strong demand, pretty diverse sectors, but every market has its challenges.
Yeah.
What are the big obstacles the naphthol oil market is facing?
Well, a primary challenge, and the source is clear on this, is navigating the toxicity and environmental risks.
Right, that makes sense for chemicals.
It's a byproduct of naphthalene, and it comes with some pretty strict regulations for handling, disposal, especially in places like North America and Europe.
So red tape, but basically.
It's more than just red tape, really. These concerns genuinely limit its use in certain things, especially consumer goods, and there's always pressure for even tighter rules. It's a constant sort of a weight on the market.
Okay, so balancing usefulness with safety is a real hurdle. What about the economics of it?
Absolutely. Price volatility is a big one. Naphthol oil production costs are directly tied to petrochemical raw material prices.
So oil prices go up.
Exactly. It makes the market really sensitive to swings in global crude oil prices or,
Yeah.
any disruptions in refining. That creates uncertainty for producers and buyers alike. It hits profitability.
And are people looking for alternatives? Are there substitutes?
Yes, definitely. The source mentions the availability and the increasing adoption of safer synthetic substitutes. That's certainly impacting demand.
So things that do a similar job but are maybe less tricky environmentally.
Yeah, precisely. Alternatives offering similar performance but with fewer regulatory headaches or environmental issues are gaining traction, especially now, this sustainability being such a high priority everywhere.
That makes a lot of sense. So given these drivers and these restraints, how is the market actually adapting? What are the big trends shaping things now?
This is where it gets quite interesting, I think. The research points to a really clear geographic shift.
A shift? How so?
We're seeing the main consumption hubs actually moving. Emerging textile manufacturing centers, think Bangladesh, Vietnam, Pakistan, they're becoming huge consumers of naphthol oil.
Wow. Okay.
And that fundamentally changes the global supply chains, the trade flows for this chemical. It's a big deal.
So demand isn't just growing, it's literally moving around the world. What about the product itself? Is naphthol oil changing?
Definitely. There's a significant trend towards product innovation, specifically focusing on higher purity, lower toxicity grades.
Ah, responding to those safety concerns.
Exactly. It's a direct response. Manufacturers are investing to meet stricter standards, offer products with less environmental impact. It's pushing the technical side of production.
Purer products. Seems like a necessary move. And finally, something we see everywhere, digitalization.
Absolutely. The digitalization of chemical distribution is changing how chemicals like naphthol oil are bought and sold. We're seeing much more use of B2B e-commerce platforms.
Makes sense. Easier online ordering.
It's more than just ordering. It streamlines the whole supply chain, helps with inventory management, and it can potentially open up new markets, especially for smaller players. It's really transforming the sort of transaction layer of the industry.
Okay, so let's try and pull this deep dive together then. The Naphthol oil market, it's being pushed forward by really strong demand from key industries. Dyes, textiles, pharma, specialty chemical.
Right. Fundamental demand.
But at the same time, it's grappling with significant challenges, toxicity rules, volatile raw material costs tied to petrochemicals, and competition from safer alternatives.
A classic push and pull.
And looking ahead, the key trends seem to be this geographic shift in demand towards emerging markets, a real push for purer, safer products, and this move towards digital platforms for trade. It's a market facing, well, classic dynamics, but also adapting really fast to big global shifts.
Yeah, it's a market wrestling with its own issues while also reflecting these huge, broader changes in global manufacturing, environmental priorities, and even just how business gets done digitally.
Which leaves us with a thought for you, the listener. How can the dynamics of just one, often hidden chemical market like naphthol oil tell us so much about these massive global transformations? Shifts in manufacturing, the focus on sustainability, the digital revolution in trade. What other essential, maybe hidden markets out there might be going through similar, quiet, but profound changes right now?
This audio was created with podcastle.ai.